Taiwan's richest investors just made a move that's catching global banks off guard. HSBC's latest survey shows wealthy investors here are piling into multi-market products at a rate Wall Street hasn't seen before. Subscribe to Taiwan Tech Pulse. We bring you what Taiwan's own analysts are saying before Wall Street catches on. Got a Taiwan tech story you want us to cover? Drop it in the comments. HSBC Taiwan's 2026 Global Affluent Investor Snapshot surveyed wealthy investors across 10 markets. And Taiwan stood out in a big way. Interest in multi-market products jumped from 28% to 44% in just 1 year. That's a more than 50% increase. The highest of any market surveyed. According to Hu Xingxian, head of International Wealth Management at HSBC Taiwan, the government's Asia Asset Management Center policy is what's driving this. That policy is deregulating financial products and opening up more options for local investors to go global. So why should you care if you're tracking Nvidia or AMD? Because Taiwan's affluent investors are deeply tied to the tech supply chain. Many of them are executives, engineers, or early investors in companies like TSMC, the chipmaker that builds the brains inside every Nvidia and AMD AI accelerator. When these investors shift their money abroad, it signals they see better opportunities outside Taiwan's domestic market. But here's the twist: despite that aggressive global push, Taiwanese investors rank last among the 10 markets in confidence about hitting their financial goals. That's a paradox. They're the most active diversifiers, yet the least confident. What are they chasing? Retirement prep tops the list at 53%, followed by wealth accumulation for security at 51%, and extra income at 45%. Their current asset mix is also revealing. Cash holdings dropped from 33% in 2024 to 23% now. Way above the global average of 19%, but trending down fast. Stocks make up 30% of their portfolios, nearly double the global average of 16%. And 70% of Taiwanese affluent investors hold stocks, versus 52% globally, 65% in Hong Kong, and just 51% in the US. That's a huge bet on equities, which directly ties back to the tech-heavy Taiwan Stock Exchange, where TSMC alone accounts for nearly a third of the index. So when you see TSMC's stock move, it's not just chip demand, it's also the portfolio weight of Taiwan's wealthiest. Over the next 12 months, they plan to increase gold and precious metals by 19%, time deposits by 18%, and multi-asset managed solutions by 15%. This suggests a gradual pivot towards safety and diversification, even as they remain heavily invested in stocks. For anyone watching the AI hardware supply chain, this matters. If Taiwan's wealthy start pulling capital out of local equities, even slightly, it could create headwinds for TSMC's share price, which in turn affects the cost and availability of chips for Nvidia and AMD. But for now, the data shows they're still all in on stocks, just with a growing appetite for global exposure. HSBC's survey captures a moment of transition. Taiwan's rich are getting richer, more global, and more cautious all at once. And that shift, rooted in a tiny island that makes the world's most advanced chips, is something every AI investor should keep an eye on.